Hey everyone, Scott here. Now I've got another property market prediction to share with you today, and it's backed by hardcore 100% transparent data. Now you might be thinking, why should I listen to you? Fair question. Here's why. I work closely with Australia's #1 data scientist and actuary, Liana Pan. She called the Perth boom back in 2019 when most people had written Perth off completely. She flagged Brisbane early in 2020, long before it was on anyone's radar. And a year ago, Liana and I said rate cuts would fuel the next national upswing. Fast forward to now, and the data has actually caught up. National property prices are tracking around 9 to 10% growth in 2025. That didn't happen by luck. We don't guess, we don't follow headlines, we analyze hundreds of metrics most people never see. I speak directly to councils, planners, developers, landowners on the ground. And then I come here and I show you exactly what the data is saying. No spin, no fluff, no opinions, only data-driven information. So today, I want to do that again, but this time for Brisbane. For years, Brisbane was the alternative, the cheaper option, the place people moved to when Sydney and Melbourne got too hard. But over the last 12 months, Brisbane has actually crossed a very important line. And just days ago, the Queensland government made a policy move that quietly changed the entire outlook for 2026. That's why you must hit subscribe, get your daily property update, your 5 to 7 minute update on the property market every single day so that you can be a property insider and invest like elite property investors. So let's talk about this policy change or this policy move so that you've got all the information at hand. Now, this will especially affect the affordable end of the market in Brisbane. Most people haven't clocked what this actually means yet. So in this video, I'm going to walk you through where Brisbane really sits right now, where the city is headed in 2026, and the one policy that's flipped the forward outlook for buyers and investors. Stick with me, because once you see how these pieces fit together, the next 12 to 18 months in Brisbane will make a lot more sense. You'll have a lot of clarity about what is happening there and why. Let's start with a shift that a lot of people still haven't mentally processed. For years, Brisbane was treated like the cheaper cousin, the place you moved to when Sydney and Melbourne got too hard. That version of Brisbane is now completely gone, and it didn't fade out slowly. It snapped into a completely different gear. Today, Brisbane sits second only to Sydney in terms of price pressure. Brisbane is no longer a catch-up city. It's a premium market with premium competition. And here's the part that really matters. People are still talking about Brisbane like it's early days. So the real question isn't, has Brisbane already grown? We know the answer to that. The real question is why it's still holding heat even when affordability is stretched and buyers are feeling the pressure. Because the forces that are doing that will not disappear in 2026. So let's unpack how Brisbane and why Brisbane made this jump to second in line only after Sydney in terms of price and price pressure. And also understand why it will not flip back. First, let's look at supply. Brisbane simply does not have enough homes. Listings are low, and they've been low for a very long time. The vacancy rate is one of the lowest in the country at just 1%. When supply dries up, the competition does intensify. Buyers have fewer choices and sellers hold all the leverage. That alone would be enough to keep pressure on prices. But Brisbane doesn't just have a supply problem. It has a buyer quality problem, in the sense that demand here is unusually strong. Queensland has been pulling the highest interstate migration in the country, and this is a critical point that gets missed. When people move from Sydney, and primarily they're coming from Sydney or Melbourne to Brisbane, they're not starting from zero. They've usually sold a property. They're sitting on equity. They arrive cashed up and ready to buy. And where do they aim? Straight at the affordable and mid-range of the Brisbane market. That's why Brisbane doesn't get slow cycles, it actually does get waves. If you layer on top of that the Olympics, now not the event itself, but what it represents, years of infrastructure investment, transport upgrades, job creation, investor confidence. We've seen this before. Sydney didn't just host the Olympics in 2000, it permanently changed how the city functioned. Since then, Sydney prices didn't fall back to old levels. They reset higher and stayed there. Brisbane is now on that same trajectory. Brisbane is now on that same path. It's no longer dependent on mining. It's no longer a boom and bust story. It's a major capital city with a broad population base, with a diversified demand and long-term momentum and a diversified economy. That's why interstate migration hasn't slowed. And it's not just affordability driving it. It's lifestyle, employment, and opportunity. Now I want to talk about this government change, this government policy, That's really going to change things for Brisbane. So this is where things get really interesting, because just as Brisbane is already tight, the Queensland government has stepped in with a policy that cements demand for 2026. Queensland has doubled funding for its Boost to Buy shared equity scheme, taking it to $330 million. Here's what that actually means on the ground. Buyers can enter with as little as a 2% deposit. The government takes up to 30% equity on new homes or 25% on existing homes. Properties can be worth up to $1 million. And the income thresholds are very high. Singles earning up to $150,000 qualify. Households earning up to $225,000 also qualify. That's a large financially capable buyer pool. Now, in theory, this reduces repayments early on, but in reality, it does something far more powerful than that. It launches a new wave of buyers straight into the most competitive part of Brisbane's market. And this scheme does nothing to increase supply at all. It doesn't build new homes faster, it doesn't unlock land, and it simply allows more people to bid sooner. We've already seen what this looks like. Earlier versions of Boost to Buy attracted over 11,000 registrations of interest. So when this expands, you're not easing pressure, you're actually concentrating it, you're increasing it. That's why critics are warning this policy will push prices higher, especially at the affordable end. It helps the first few people in, but it raises the entry price for everyone else from that time forward. And if you're still unsure about the impact of policies like this, just look at what the 5% deposit schemes did nationally. Month after month of growth above 1% in just 1 month. Now combine that effect with an expanded budget, a tight market, and Brisbane's demand profile. This is demand fuel to a market which cannot produce the supply. So let's talk about what this actually means, because the policy does cut both ways. If you're a first home buyer, Boost to Buy can actually help you, but only if you're early. The first group benefits, all the early movers that can benefit in 2026 will get a benefit out of that. After that, prices adjust, they're going to be higher forever, and the advantage does evaporate. That's how demand side policy has played out for decades. We've seen it time and time again. Now let's flip that around. If you're an everyday investor, this data should make you stop and really think. Just look at the setup. Brisbane isn't losing momentum. Supply is still tight. The population is still growing, rapidly growing. Infrastructure spend is locked in for years, and now demand at the entry level has just been turned up a notch by the state government. So ask yourself, what does that usually lead to? Now, SQM Research is already forecasting Brisbane growth of around 10 to 18% in 2026. They've got 4 or 5 scenarios, depending on what interest rates do, the economy does, unemployment does. You can actually take a look at their research. And in fact, I've done a really good video on their research, which I'll put in the description. Now, in even more conservative scenarios, Brisbane is still sitting around double-digit growth. That's not a boom and bust profile. That's what a structurally supported market looks like. So I'm generally keen to hear from you. If you're on the ground in Brisbane, do these numbers actually match what you're seeing at inspections, auctions, and in your local area? Leave a comment, let me know. Because data is one thing, but what's happening real time is another. Appreciate your time, and as always, this is your 5 to 7 minute update, your 5 to 7 minute breakdown on the property market every single day, so you get that pulse on the market. Make sure to hit subscribe so you never miss an update. By the way, the video on SQM is right here. Go ahead and click the link to get that video right now.